oh, hey, great, let's get that lower interest rate. And it's like, good news, guys, you already got the lower interest rate. We already knew this was coming. But the great news is this is the beginning of the new cycle. Big party rates are down, which is true. But the reason isn't that borrowing costs to the consumer to buy a house went down recently. The big news is, guys, we've made it to the mountaintop of all this rate stuff. Things are going to start, inflation, jobs, all that, and things are going to start getting better. That's the big news. So start making your plan now. It's not like the boat's left without you, but it's the action's starting to happen, and that's what's exciting.
Hey, what's happening, friends? I'm here with my friend Kevin from NFM Lending. He's the market leader and an integral part of our team and how we service our clients. And there was a big happenings, a news event that happened recently when it comes to interest rates. And people always talk about what's the interest rates doing? Are they going up? Are they going down? And this is going to be a little bit of a wonky discussion about the details, because after talking to Kevin about this, it really is important to understand kind of the bigger picture and the sausage behind what happens when you actually get an interest rate on your mortgage, right? So I'm going to turn it over to Kevin, and he's going to give us the high level overview of what happened. And then we're going to talk about kind of what that means for you as a buyer, a seller, or a real estate agent. So what happened, Kevin?
Awesome. Well, thanks, Dylan, for having me on. So if you got Instagram, which everybody has, or you're on the internet, everybody saw the recent news that the Federal Reserve has lowered interest rates by 0.5%. It's the biggest slash to borrowing costs since 2008. And it's the first time they've lowered rates since March of 2020. So the big question in regards to real estate is, what does this mean for our interest rates for getting mortgages? Now, remember, the Federal Reserve, they meet about 8 times a year, but mortgages to go over their interest rates, but mortgages, they can move every day. And what happened was, ironically, once the Fed cut this 0.5%, mortgage rates actually went up, which seems really counterintuitive because it sounds like they're talking about the same thing. But what you need to know is that people on Wall Street know this is coming, right? And the recent rate cuts were actually already priced into mortgages. So if you got a loan anytime in the last 6 to 8 weeks, you already took advantage of the lower interest rates. When the Fed meets, the thing that gets the most attention is what they do to interest rates. But the thing that's most important is what they say afterwards, their comments about what the future looks like. And what their comments about the future look like are they're anticipating to cut rates again, another 0.5% to 1%. So even though mortgage rates didn't really do much on that day, because we weren't surprised, we all knew, I was sending Dylan the forward-looking statements on this weeks and weeks and weeks ago, so that his team obviously is in the loop on this stuff. But the important thing is that rates are going to be going down. And for you as a consumer or you as a realtor, the thing you need to know is this is the beginning of the new cycle. That's what's important. And it means different things to everybody, meaning if you bought a house in the last 2 years, I personally don't think today is the perfect day to refinance, but I do think you need to be prepared to do it sometime in the next year or two. Refinance meaning get a new loan to replace the old loan where the new loan has a better payment. And if you want to do that, all you have to do is reach out, send us a copy of your mortgage statement. We'll adopt your loan and let you know when the perfect time to refinance is. The second thing is, if you're thinking about buying a house and your finances are stable and you want to live in Hawaii for the next 5 years, that's kind of how you figure out if it's a good time for you. You are going to have to realize more people are going to be entering the market, which means more people are going to compete with you for the great house, right? And every time there's a graph, if you send me an email, I can send it to you, but every time the mortgage rates go down 0.5%, a certain amount of people are able to enter the market because of affordability. So in the pre-approval process, and you already have numbers, go back to your loan teams, get new numbers, have everything worked out. If you're thinking about buying a home, and you've got all those things figured out with your pay and with where you plan on living, reach out to us. Let us get you pre-approved. Let us show you, what things look like. So you're buying before what's possibly going to be in another cycle.
So this is really about anticipating what's coming, right? Because, and just to kind of back up a little bit, right? The federal funds rate is what banks like you guys use to determine what your interest rates are going to be, right? So when you see the news, and then correct me if I'm wrong, if you see the news and say, oh, interest rates dropped, it doesn't necessarily mean mortgage rates dropped immediately. It's that leading indicator that what mortgage rates are going to be based off of in the future, right? And that's why there's kind of that lag.
It's partially right. The federal funds rate is the rate that banks use to loan money to each other overnight. So really not us, right? We're mortgage bank. What mortgage rates are more likely tied to is the 5-year treasury. It's a more conservative investment. It's a more long-term thing. And there's a whole explanation to why, and maybe that's for a different call, but when you look at mortgage rates, they are related to the federal funds rate because that's kind of like the big daddy.
Mm-hmm.
but we don't trade up and down on the same days at the same time. They only move 8 times a year. We move every couple hours. So
it's not a direct correlation. It's related, but it's not a direct correlation.
Yeah,
right?
Exactly
okay.
Right.
Okay.
And a lot of people make that mistake. Like a lot of people are in escrow right now, and we have a huge pipeline of people buying houses on the Big Island and across the state right now. And they see it on the news, rates went down, and they immediately call us and go, oh, hey, great, let's get that lower interest rate. And it's like, good news, guys, you already got the lower interest rate. We already knew this was coming. But the great news is this is the beginning of the new cycle. So where I think the error in the messaging that you see in the media, on social is, big party rates are down, which is true. But the reason isn't that borrowing costs to the consumer to buy a house went down recently. The big news is, guys, we've made it to the mountaintop of all this rate stuff. Things are going to start, inflation, jobs, all that, and things are going to start getting better. That's the big news. So start making your plan now. It's not like the boat's left without you, but it's the action's starting to happen, and that's what's exciting.
The effects of today is really, we're going to see the effect in the market to the consumer maybe 6 months from now, right? 3, 4, 5, 6 months from now is really when it's going to take effect.
That's right. And smart people are going to be prepared to refinance and take advantage when the rates hit. Smart people are going to be pre-approved and ready to go when these rates hit, and not be competing against lots of people who become excited by this idea when it becomes more obvious, when you start to see it reflected in mortgage interest.
Yeah, and I think back to what you were talking about earlier, I mean, the thing really for consumers to take into account is we've been in a very depressed, low activity market. I mean, prices haven't gone down, but activity has been slow. I mean, we've seen in the market data, every market report that we do, I mean, we're seeing historically low numbers of transactions, and that's really due to the lack of buyer demand that's out there because inventory has been rising. But this will fix that, right? I mean, once a buyer starts seeing that that affordability is coming back, they're not shocked by the sticker price of interest rates. You don't want to be stuck in the rush of folks that come back all of a sudden, right?
Exactly. You're right, Dylan. The two things that drive prices are rates and jobs. That's the housing market. What's my payment going to be and how much money am I making at work? And I think everybody watching this can identify with that. This is the piece. What's my payment going to be? This is the great news. Going to get better. It's not at like its peak right now. Like I have all these people emailing me today. Oh, that's why I want to refinance. And I'm telling them, I don't think today's the day, because this is where the wave has crested and broken. And now it's going to start to pull back and reveal all the great savings and opportunity for people that are watching this.
I think this is good news, but at the end of the day, I think going back to you made a great statement earlier about if your finances are stable and you're going to be in a place for 5 years, that's really the best time to buy. And trying to time the market and be perfect and get the exact right interest rate, I mean, that is impossible for any of us to predict and foresee, right?
Yeah, well, there's a lot of loan officers out there who were waiting, who knew the Fed, they knew this information, had their clients without locked interest rates going into this, and their clients actually end up with a little higher interest rate. And those are loan officers who know what they're doing. They're good at their craft. There's nothing wrong with them. But the point I'm trying to make is this stuff is so volatile. You cannot get it perfect. But what you can do is know if it's time for you to buy a house. And great lending and real estate professionals should be able to help you figure out if the time's right for you.
Awesome. Well, any final thoughts? I wanted to just do a quick update for everybody on this, and we'll definitely do more and keep you guys posted. But any final thoughts on the big news?
2 final thoughts. Thought number 1, if you're out there and you bought a house in the last 2 years, let us adopt your mortgage. We'll tell you the exact perfect time based on our analysis to refinance. All you got to do is send your mortgage statement to kevin@nfmlending.com. Number 2, if you're wondering if now is a good time to buy a house, what the new interest rates look like for you, even if you're already pre-approved, reach out to either Dylan, any of his real estate agents, or my team. We're really easy to find online, and we're happy to freshen up that pre-approval for you, give you a strategy, let you know what it looks like for you in this new environment, and get you super prepared to purchase a new home.
Yeah, that's great advice. I'll echo that. I mean, even considered buying in the last couple of years, a lot has changed in the last couple of months, especially in the industry, not just with rates, but it's really important to sit down, spend 30 minutes to an hour with a professional. Just do a consultation. There's no pressure. Really figure out what the landscape is, and then we'll help map out if this is the right time. And if it's not, we'll figure out a plan to get you to when the right time is. And with Kevin's team and my team, and we'll definitely take great care of you so you can set yourself up to be in the best position possible to take advantage of the market when the time comes. So
yeah,
appreciate
Dylan,
the update, man.
You say it best, which is, has anybody had an opportunity to walk you through what it looks like to purchase a home in the state of Hawaii right now? If the answer is no, and nobody's walked you through what that looks like, and nobody's explained that process to you, reach out to Dylan's team. They've got the best presentation that I've seen as far as helping people get situated to purchase a home in the new market, whether you bought a home in Hawaii before or not. And definitely take advantage of that.
Appreciate that, man. All right, thanks for the update. And if you guys have any questions, as always, you can email us, Kev. We'll have both mine and Kevin's contact information in the comments and link to book a meeting. So reach out, and we're always here for you guys. Thanks, Kevin.
Yep, appreciate it, guys. Bye-bye.